This video was brought to you in part by SD Bullion.
While some online bullion dealers continue to charge $4 over spot for US Mint Silver Eagles, SD Bullion is selling 2016 Silver Eagles for just $2.29 over spot for any quantity. Again, that's just $2.29 over spot for any quantity. If you haven't joined over 25,000 new customers by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
Hey everyone, this is Elijah Johnson with financeandliberty.com, and with us today is Bill Holter from jsmindset.com. Bill, thank you so much for joining us today.
My pleasure, Elijah.
All right, well, I'd first like to discuss about one of your most recent articles. You recently said that we are now on the verge of economic World War III. Did you want to expand on that?
Well, yeah, as a matter of fact, since I wrote that, I think I wrote that last Tuesday or Wednesday a week ago, we just saw the G20 summit. And the U.S. delegation, President Obama got to China and arrived to no stairway and a very rude welcoming. Basically, I mean, Ira Harris on CNBC, the way he put it was, the U.S. just got bitch slapped in China. So in the past, the Chinese have been very respectful and everything is held together, but it just looks at this point like the geopolitics are starting to fracture, and we know the U.S. is definitely in a weakened position. All you have to do is look at financial ratios, look at the leverage, look at our military. Our military is not what it was years ago. So it looks to me like financial warfare. I really don't think China and Russia want to start or be in World War III. And I've said for quite a few years now that I thought that China would ascend and maybe not even fire a shot, and it would be an economic or financial World War III, and they would ascend to power. And they've accumulated gold for years and years. We have distributed our gold. I don't think there's much gold left at all in Fort Knox, the New York Fed, etc. So it just looks to me like we're headed for economic warfare, and the result is going to be a much lower standard of living in the U.S. and in the West.
Now, you talk about in the article about an economic war that seems to be starting between Europe and the United States. Did you want to talk about that?
Yeah, you're seeing populism take hold. And you see that via the Brexit vote. You see that here in the U.S. with Trump being popular. Europe looks like it may be fracturing even further. We've got a vote, I think, in October, an Italian referendum. Le Pen is saying that if elected, there will be a referendum in France. And it looks to me like Germany's really got to make a choice. They're going to have to make a choice between either staying with the West or turning east toward Russia and China. You also have Turkey is pivotal. Turkey is supposedly our ally, and they just, it looks like they're turning toward Russia. It just looks like things are breaking up, and it's like you said, or like I wrote, it's going to be financial warfare. It's going to be every man for himself, and generally what happens is they dump the losers. People that are on the fence will dump the loser, and the loser in this instance happens to be the West because of the financial leverage and the fiat currency itself.
Now, I was wondering if we could discuss a little bit about the rigged system, because you talk about in the article how the rigged system, and you question whether the rigged system will survive the economic war. So did you want to explain a little bit about what do you mean by the rigged system, and if you think it'll survive the economic war?
Well, first, first I kind of asked that as a rhetorical question because the rigged system in the West cannot survive the economic war because the economic war is going to be lost. Basically, what I was getting at is everything in the world today is rigged. We're living a fairy tale standard of living. We've lived beyond our means for 50 years, and when the time comes to pay that back, we can't pay it back, and our standard of living is going to drop. Now, as far as things being rigged, all markets are rigged. People are now finally realizing that in order to have negative interest rates, you obviously have to have a rigged market. You've got stock markets that are rigged. All commodities are rigged. And in the article I was talking about, many people will admit that all markets are rigged except for silver and gold. And it's my contention that silver and gold were the original rigs because you can't have 0% interest rates or low interest rates with $10,000 or $20,000 gold. They just don't go together. So in order to support the Treasury market, i.e. the borrowing ability of the U.S. Treasury, and to support the dollar, they've had to suppress the price of gold, and they had to suppress the price of silver because if silver was skyrocketing, then gold would catch on. So silver has been bashed over the head just because it's related to gold. But basically, all markets are rigged. Elections are rigged. Our standard of living is rigged, and that's not going to survive the economic war that we're about to lose. The system is about ready to come apart at the seams, and when it comes apart at the seams and all control is lost, your rigs are completely lost, and Mother Nature is going to reset. This goes back to the term reset. Mother Nature will reset asset values, pricings, etc., across the board. And that includes standard of livings, by the way.
So did you want to give us maybe some targets on where you see our standard of living going, and maybe, once the gold and silver markets stop being rigged, once the system collapses, where you see those prices going? And a lot of people have talked about how the stock market is being propped up at these all-time highs. Where do you see the stock market going as well? So if you could touch on those three things, what kind of price targets do you see?
Well, let me start with the last one. The stock market, I do think that we're going to have a big dump in the next couple of months, probably certainly before the election. And that's if we have an election. I give it a better than a 50% chance that we don't even have an election. It's my contention that everything unwinds, comes apart at the seams, and we have some sort of martial law, and under martial law, you won't have an election. I do think the stock market, the equity markets will drop severely. You could see a 10 or 20% drop, and they may shut the markets. The thing about stock markets is if you look at past hyperinflations, you'll notice that stock markets collapse, and then all of a sudden they turn, and they start going up, and they explode higher. The thing is, they go up just a little bit slower than the currency goes down, so you do actually lose purchasing power. What were the other 2 points there? The other two you want to touch on? The stock market and what else?
Yeah, where do you see precious metals going once the rigging stops? And also, where do you see our standard of living going? If you could give some targets on those.
Yeah, the standard of living, I would imagine on the initial shock, you'll probably see the standard of living drop 20 to 30%. And this is assuming that it's not a lights-out event. If we have a lights-out event where the markets do actually close and banks close for a period of time, how do you judge that? Your standard of living drops to whatever level it is that you have goods on hand, because you're not going to be able to get goods at Walmart. Distribution will break down. When credit dries up, distribution will break down and stop. And if you've got banks closed, you're not even able to open the doors at a grocery store or a Walmart or whatever. So if we don't have a lights out event, I think the initial drop, the initial shock in a stock market drop and currency crisis would be 20 to 30%. But I do think at some point in time we are going to have a lights-out event, and your standard of living is going to be basically what you have on hand in your house. As far as precious metals are concerned, it was, I don't know, 2 or 3 years back, the number was tossed around of $50,000 gold, and I wrote at the time that $50,000 gold may be laughably low. There's really no way to tell, really no way to forecast a number on gold in dollar terms for two reasons. One, we don't know how much gold the U.S. actually has. I suspect it's very close to zero. And secondly, we don't know how much more money supply the Fed is going to create. I mean, if the Fed creates doubles their balance sheet or triples or quadruples the amount of money supply, then you're talking about a doubling, tripling, quadrupling of the price in dollars of the amount of gold that we actually hold. And that may be, if it were zero, then the price is infinity in dollars. In other words, the dollar goes to zero. Now, you also have to look at the comparison of gold versus other goods, gold versus a gallon of milk, or gold versus a cow, or gold versus a barrel of oil. I think gold will appreciate. To what extent, I'm not sure, but in dollar terms, like I said, it's a fool's game to try to pick a number and say that's going to be the top, because there's the two variables that we don't know.
Now, did you want to discuss a little bit about how people can position themselves so their standard of living doesn't drop, if that's possible, or how they can thrive in this collapse instead of having their standard of living drop significantly?
Okay, well, first of all, you could be a billionaire and your standard of living is going to drop. And the reason being, if you get a seizure in the system and you're a billionaire and you have a favorite restaurant, your favorite restaurant's not going to be open. There will be no thriving, as far as I can tell, in anybody's standard of living. The best thing to do is just prepare for 3 months, 6 months, maybe longer, who knows, with goods that you think you're going to need to use. I would ask, what happens if the electricity goes out? What happens if the water supply goes out? I mean, that's completely devastating to the standard of living, to the point where we're going to have, a massive death count. As far as preparing, just do the best you can. Stock up on things that you think you're going to need to use. And by the way, that also does include if you don't have any firearms, you're going to need to protect what you have.
Before we let you go, I was wanting to touch on the precious metal markets. Now, you've recently talked about how the gold and silver markets, you think the correction is over and a breakout is coming. Did you want to talk about this?
Yeah, it just looks like, we had a fabulous first 6 months of the year. We had a correction set in, and we were due a correction because we started to get frothy. It was looking like a one-way market. We had a correction set in. And of course, the correction was aided by several tranches of $1 billion, $2 billion, $5 billion worth of gold hitting the COMEX market in a minute, which is totally fraudulent. It's not gold; it's pure paper. So the correction was the length of the correction was aided. What I'm encouraged by is that the correction was very shallow. And just this past Friday, and yesterday's action, we pretty much are back to very close to the old highs in gold, and I think we got up to 2020 or 2025 in silver. So we're, 60, 70 cents off the July, the July high in silver. It just looks to me like they're they're resilient. The shares bounced back. The shares have been extremely strong and have led this whole rally. And it just looks to me, with what I see coming in the next couple of months between September and October, in the financial markets, it just seems to me that we're about ready to break out to the upside and really start to run in the precious metals. I do want to mention another indicator that really the only person that's talked about it is Harvey Organ. There is, for the last 4 to 6 weeks, there's been a growing premium in the Shanghai market for gold versus the London market. And if you look at COMEX at the same time as the London market, those are basically equal. There's been a $3 to $5 premium for Shanghai gold versus London and COMEX gold. And that is certainly enough to allow for arbitrage. And if from the low levels of Western gold, the tightness in the market, arbitrage very well could tip this thing over, and you could see the spread get wider. If the spread gets wider, there's going to be more arbitrage, and it becomes self-fulfilling. So keep an eye on the spread between the Shanghai and London market, the London fix. But I think if we approach $10 or go through $10, it's the Western gold markets will break.
Now, some people might say, it seems like gold, in 2000 or so, it bottomed at around $250. It's gone up so much. It's at 1,300 something right now. And some people might say, well, it's too late to buy gold. But recently in an article you wrote, I think this was last month, you were showing that gold with respect to the monetary base is actually pretty much cheaper than it's ever been. Did you want to explain the significance of this?
Yeah, if you look at the gold price to the monetary base, the only time that gold has been cheaper going back to the year 2000 was last October, November, early December. Gold today at $1,300 or $1,350 is actually cheaper than $256 gold in the year 2000 when you compare it versus the monetary base. And that's really what you've got to compare it to. You have to compare it to the amount of dollars outstanding, and you could also compare it to the amount of debt outstanding, and it would be the same thing. So gold is cheap, and silver is even cheaper.
All right. Well, Bill Holter, thank you so much for joining us today. Before we let you go, are there any last thoughts you'd like to add, and where can our viewers find you online? You can find us at www.jsmindset. It's now a dual site. I try to write a couple of public articles, sometimes 3 public articles per month. Early in the spring, Jim Sinclair and I decided to move the site toward a subscription site. I write 2 to 3 articles per week. That's for subscribers. And then Jim and I do we do an interview of each other. It's really just a chat or talk about current events. Oftentimes we take subscriber questions. We'll go for half hour, 45 minutes once a week, record it, and we put that out for our subscribers. So if you are interested in reading my work, and I say this all the time, in the interviews, just listening to Jim once a week for 30 minutes to an hour, that's worth the price of subscription on its own. And it's very reasonable. It's $119 for the year. All right. Bill Holter, once again, thank you so much for your time today.
Thank you, Elijah. My pleasure.
This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with Brad Harris, founder of FullSpectrumSurvival.com. Where will your family members go in an emergency? Does your family have coordinated and staged plans to get home and evacuate? If severe weather hits while you're at work and your kids are at school, how will you all get home safely? What if there's trouble in your town, your travel route, or neighborhood, and it's not safe to go home? Does your family know how to get to the right meeting place? Brad Harris, emergency newsfeed analyst and founder of FullSpectrumSurvival.com, joins reluctant preppers and reveals how to develop a robust, multi-tiered, and field-tested plan to keep you and your family on the same page in a crisis, even when communication is cut off. Start planning your vital get-home and evacuation plans today.